there's a problem back under this little double top here. And when you look at it, even though we did blow above it, there are non-confirmations on many time frames. Okay, even the daily, you know, just a shade over 70, and there's our, daily look. It's not going to take much for a reversal. In fact, you know what the surprise was last week? And I think most people would say it was surprising. We all thought it was going to be risk off in equities that would generate a bid in the dollar. And in fact, what happened was a rally in the dollar is now creating risk off. So the tail wagging the dog is the dollar rather than risk off. So um, the featured short that I talked about last week, even though Euro did come off and close lower, was cable up here. And we do have a breakdown out of a descending triangle. Here's a formation, this is a breakdown here. So now you know that you don't want to stay short if we start closing, say 135.40. But this is about 160 pip formation. So it's probably going to take us down to where Blake says it's going to be very critical for cable around the 134 level, because he had this breakout over a long-term trend line. So that's what this formation measures down to here. I don't think I would do anything new here, still holding some from last week up here. But I might consider, if we get a rally back to this level, to try it again, because there could be more. And last week, when we came in, I was talking about a dollar bottom. I think this was Monday, and we had one more low, and the dollar's following through. I talked about a monthly off number up around 91.80. So, I don't see anything to tell me that I have to go with what happened here last week. It was a decent week, a hammer with some follow through. So, here's a pretty important level right here, is this 91.74, which is near where that monthly off number is. Remember, we had this little rally with a 3 drive here. So this is the initial target on the upside for the dollar, and we'll see if we could have one more decline towards 88.5 that a lot of people are looking for. This is something else. This was a very nice chart I put up at the bottom in the end down here. There's your weekly, but here was the daily. Showed it down here, and this is when, everyone was talking about, I don't want to trade the yen. You can't trade the yen. And the reason for this is I saw the yields breaking out. Yeah, because of this, right? So we're right on the verge of a breakout here. It's a little over 104, but this formation measures all the way up towards 110. So this is a major thing going on right here. Turn in the yen, and the test for the yen is going to be if S&Ps break down, because I think if we do break this level here, that I don't see anything until about 36. So this is going to be a test to see if there's any kind of flight to quality in the end. But instead of being concerned about that, I have to go with the technicals, right? And the technicals showed this divergence down here. I featured it here in face, I believe it was at the bottom on Wednesday or Thursday of last week, and it's just on the verge of a breakout. So last week we had some reversals, first week of the year in the dollar, mainly in the dollar. And even though crude is lower, it's much stronger than S&Ps. If you look at just, the 15-minute chart, look at where we were here. This is Friday. And then look at where we were in the S&Ps, not even close to 70. Even the NASDAQ, not even 70 on that ramp that we had on Thursday. and Friday. So yeah, gold, I think a lot of people are, in trouble if they were, didn't manage it. This might be a support level, but I actually think I can't get long metals, all right, until I think the yen rally is over, US dollar yen rally. Okay. So I can't consider it. So maybe we're heading down to here. I think we will take out this low. Sure, there could be rallies here and maybe some people like it here, but I think we have to clean out this low from the end of November. And actually, silver has been weaker the last few days. And I know that I discussed it here with Steve that I thought we were due for some type of bear market rally in the gold silver ratio. And, we held the previous low and we're on the verge of it coming out of here. I don't cover it. I don't cover it. It's a mania. I really
I'll
don't
look
think
at it
it's
when we
straight.
get. I'll look at it when I start.
Okay, Blake,
Yep.
because I just don't know how to trade it. When it was 3,000 or 7,000, you could trade it risking hundreds. Now you have to risk thousands to be in it. So anyway, Blake will cover that for you. And I think that's about all I wanted to cover. We have a nice little pop coming here in VIX. Just in case, I went over this with some of my mentees on the weekend, just in case the S&Ps could generate one more rally. Something to keep an eye on is, with all this strength, we still have not filled this gap, right? From the spring, from the COVID crash, it gapped up. The gap would be filled at 1820, which is the high. We haven't done it. And coincidentally, look at this. You have the 200 week at 1820. So we'll see if that's a magnet or not. But, that could be a place, although I'm not sure that we're going to head down there with the way the market's acting. But there's some pretty interesting confluence at 1820 in the VIX. Again, though, if we start taking out 29 anytime this week, which it seems like it's pretty far away, but back above this 2980 level, I see 45. Okay, and DJ was watching 1718. So yeah, I remember that, DJ. In fact, someone was asking me, someone in face that they were going to load the boat at 1718. So there's your 18 number. Well, good morning, Blake. How are you, buddy?
Hey, good morning. How are you doing?
Okay.
Sorry, I was just in the middle of typing something. I was actually gonna tweet out this chart this morning. I just tweeted out a couple of things. I tweeted out the link, and automatically I just wrote, hey, come join us because we've had, so we can cover the sell off in the dollar. And I'm like, oops, no, I meant the rally in the dollar.
Yeah.
Because I think I'm just so used to typing that the dollar's
Yeah.
selling off that I
Yeah.
just did it, and then I sent it out. For you guys know, I mean, I get up early in the morning, so it's in ridiculous hours. So I just typed it, and then I was thinking, oh man, I did a typo, so I needed to go ahead and
delete
go
it.
back and fix it. Then I sent out another typo. So I just basically give up. I give up.
Yeah. Lay off Twitter
That's
till
the problem with getting up at 3-4 o'clock in the morning, Dale. It's
I
an
know.
issue. Yeah. So anyway, how are you today?
Pretty good, Blake. Pretty good.
Yeah.
Okay.
You're okay. You're getting by.
Yeah.
Yeah. Have you been able to go to the beach?
I haven't gone.
If I lived as close to the beach as you do, despite COVID, I would go and just go to
every day. People say that to me.
No, I mean, I'd way rather than go there than out to the desert where I go.
Yeah,
So, you know, like, oh, I'm going out to the desert now. I'll go out to the desert and go shooting with my kids and things like that. But still, I'd way rather be at the beach.
yeah,
Just to see the ocean. And I know people say that it's like when people come here to Arizona and they go, "Oh my gosh, it's sunny all the time. I love it." And I'm like, I wish I had some rain
yeah,
from time to time. It'd be nice, because we get
yeah,
the sunlight every day.
yeah.
Three
When it's in your backyard, kind of
Yeah,
take it for granted. But
yeah, of course.
yeah,
And you're never gonna appreciate it until it's gone. So you should come move to Phoenix, and we can flop spaces. How about that?
okay, all right,
All
buddy.
right, so we got some movement this week. We got and somebody had asked us about Bitcoin. I didn't
Yeah,
see who did, but
Arena,
I'm sorry.
Arena asked
Oh,
about
okay.
Bitcoin.
Yeah, she's in our chat room, so I'm gonna go ahead and cover Bitcoin really quick. And first of all, if you guys are Forex Analytics subscribers, just know that you got this update already, and she is, so she should have seen it. This is the Bitcoin basic technical analysis 4-hour chart. So what does that tell you? I'm going to ask you, Dale. It's really easy. What does that tell you?
It's still in an uptrend.
Still in an uptrend. We found support at the 618 retracement.
Oh, okay. Yeah,
Which is 33,000, and
yeah,
basically a move below 30,000, which is right here, would be bearish,
yeah,
right?
yeah.
Because
Breaks
if
the
you
uptrend.
Yeah, it breaks the uptrend. You'll probably see the 200-day moving average. You'll probably see this 20, whatever is that, 27,000, maybe 28,000, this previous trend line here. But that breaks the uptrend, and then you're going to start to see sellers on rallies. Like people would be like, oh, geez, if we get a rally now, I'm gonna look to sell into any strength. So for now, the uptrend's intact, but as I pointed out here, if we break back below like the 30,000 level, and you guys know the 30,000 is really important. Why is it so important? Is because that is the previous, oh, I'm sorry, that's 20,000. I don't know why I had 30,000 in my head, but 30,000 is going to be a big deal because that's a big round number, and I think if we, break the 30,000, then there is a risk that we could quite possibly, spend the next several weeks, maybe a couple months backing off towards 2,000 and, or 20,000, excuse me, which would be the major breakout point, which, I think anybody and everybody's got to be looking at that as being a place to be on the long side. If you are a believer in Bitcoin, or even if you just want to try to take a punt and be long, I think 20,000 is the place because that was the previous highs, right? That's the previous breakout point. So anyway, that's how I feel about Bitcoin. And I think, mania or not, usable or not, it is here's the one thing I've got to view Bitcoin as at this stage in the game. Now things can change between now and 10 years from now. But at this stage in the game, I think millennials trust digital currency more than they trust fiat currency. They trust digital currency more than they trust gold because they're like, well, why would I hold gold when I can just hold digital currency, right? So at this point in time, digital currency is the millennials version of gold. So guess who's going to have all the money in 20 years?
Good point.
Nobody.
Nobody.
Millennials. So yeah,
Nobody.
I mean, as long as things don't change and as long as things are remain the same, I had a lot of skepticism about Bitcoin and originally, and from an ethics standpoint, really, I'm like, okay, all these Somali pirates are using Bitcoin. I don't want to use it. You know what I mean? But
Yeah.
let's face it, it's probably going to garner some more use as we move forward, unless there's some big disruptor or big regulation, taxes. I mean, but for right now, that's how it's being viewed. So we got to look at it as that. All right. Now what I'm going to do, guys, is we're going to go through the bias chart, and we're going to go through all the analysis as we normally do. So if you guys are new to the face webinar, just realize I've been doing the hold on really quick. Let me think about something. Here's the Aussie. I'm going to do analysis on all the major currencies, and we're going to put it all the major levels down on the bias chart. We do the bias chart. I do the bias chart every day. I've been doing the bias chart every day for 100 some odd years. No, I'm just kidding. I mean, since even the mid 90s, I used to do it with equities. So like if I was trading like let's say chip stocks, okay, I'd have a bias chart, and I would say, okay, if the market goes up, I want to buy LLTC, Maxim, you know, and you know, Intel. And then if the market goes down, then I want to sell like Broadcom, and you know, so I would do basically, if the market's going up or down, which currency or which stocks would I trade, and what are their key levels? It's just evolved over the years, where now it's like, okay, if the currency market's moving and the dollar starts to move during the North American session, what are going to be the best currencies? Which direction are they going? And what are the key levels? And that's how I go about my day every single day. Is it perfect? Probably not. Does it work for me? Yeah. Will it work for you? Maybe. I mean, I'm not here to dictate and tell you what's right for you and what's wrong for you, but it's a good process that gets you through the analysis and allows you to identify where all the key levels are. So I do this for myself every day. Okay. All right. So let's start with the euro. So as you guys know, once the euro broke the 122 level, and if you watched the week ahead video, you knew this is coming. And if you watched Friday's face webinar here, you knew that we were going to challenge some of these lower levels as we broke the uptrend, right? So you can see the longer term uptrend since November have been broken last week. And that's why, you know, if you use Forex analytics, there's an active pattern in play from Friday. Okay. You know, when we were trading between 22.45 and 22.55, that was nearly 100 pips ago. Now, once we cracked that, we knew that there would be some support down here being challenged. So, you know, we broke the 20, here, let's zoom in just a little bit here. We broke the 22.15 level, and that is going to be resistance overnight. So if anybody, or if anybody sees the euro back at 122.20, they're going to be a seller. They're going to try to sell because they're like, shoot, that was a breakdown point. I need to be out there, right? Question is the market going to allow them to get out there? Now, you guys know that I went from a bullish trend into a range bias. Is it bearish today? I think it's bearish today. I think it's bearish for the next couple of days. But I think that overall, now we are in probably more of a range between 120 and 123 for the foreseeable near-term future. Okay. Unless we see equities absolutely implode, that's probably where we're going to be, what's going to be happening. All right. So, anyway, here's the euro support 121.25, which is the 161% extension of that last move higher. So it's 121.25. Basically it's 27, but you guys get that. This should be pretty key support today, by the way. And, you know, for all intents and purposes, this should be a pretty good resistance too on rallies. Cable. Hold on really quick. Let me do something really fast. Oops. Okay. All right. Here's the cable. All right. So the cable, you know, we wrote down support as being 135, resistance as being 137 last week. Here you guys go. Here's your bias chart from last week, just so you guys can see it. That was us from Friday, 135 to 137. Well, now that the dollar is gaining strength, we're below 135. The 50% retracement comes in at 134.45. Then there's some horizontal support. So I would say that the support here probably pretty important. So that's 134.25. Okay. Resistance. This is all previous support, should be resistance now. So if we see a move back up to 135.50, I'm assuming you're going to find sellers up there now. Okay. Aussie. So the Aussie, Dale does the throw over. I was actually going to tweet this before I started, but I'll tweet it later. You guys are going to see this via tweet. And when you see it tweeted, please retweet it. I mean, you know, I always, well, if, you know, you guys hear me say this every once in a while. I don't always say this, but you know, we do these webinars for free every day. Some of you guys have been hearing my voice for the last 15, 16 years now. Because that's how long I've been broadcasting in the mornings, you know, for like 30 minutes to an hour, just kind of telling you guys how I'm feeling for the day, what I'm looking at, you know, what I'm, sorry guys, I just closed an Aussie short. I was short at 77.10 and I just closed it for 9 pips. It's nothing to write home about, just something I did. Anyway, that's why if you heard the JP Morgan system say that, that's what happened. Anyway, whenever you see like our team or myself, you know, if we tweet out a chart or something, do us a favor, retweet it. I know a lot of you guys tweeted our the week ahead video, and thank you so much. I really appreciate it. We all really appreciate it when you do that, because, you know, that's for us. It's just, you know, being able to, well, you can show your appreciation, but also so other people can see what we do as well. So thank you. That's what keeps us going. All right, Aussie. So Aussie has a bear flag pattern. This is why I was focused on the Aussie this morning. When it got back to that 77.10, I sold some just a little while ago. And again, if you use Forex analytics, the bias chart or the basic technical analysis, you knew we were in a bear flag pattern. All right. So, you know, as a bear flag pattern, you're going to focus it on the short side. So 77.25 is resistance. Support right now, I mean, we're, you know, see how we're consolidating around the 618 retracement. The 78% retracement is 76.80. I'm assuming that's going to be a little bit of support this morning. 77.25. That should hold any rallies. And I'm kind of hoping we get one more stab up to 77.25 first. Then I can be a seller up there. Kiwi, look at the Kiwi. We sold off over the weekend. You know, we pulled back. So last night we broke down and we haven't gone anywhere. So you have to imagine, if you own the New Zealand dollar right now, you're probably thinking, man, whoops, I didn't want to do that. You're probably thinking, man, I don't know if I really want to own it. It won't even bounce, right? We broke this uptrend line. We're consolidating around the 38% retracement. Next support is going to be horizontal, 50% retracement, comes in at 71.50. If that breaks, the Kiwi is going to come under some pressure. We are, since we broke the uptrend with the Aussie, or we're back in the channel. We put last on Friday, we're still in bullish, but now that we've broken back into the channel, I'm going to keep it at range. And same with the Kiwi. We've snapped this little uptrend. And you know what? You know, I'm going to keep it. Actually, I'm going to keep it in bullish for right now. This is going to be really key support right here. I'm going to keep the 71.50 support written down. But see this level right here? Yeah, that's the breakout point. So that comes in at 77 or 71.70. You know, no one wants to pull the trigger first. I'm going to keep this in a bullish trend for now. Resistance, and he moved back up to 72.20. Should find sellers. Dollar Canadian. Came out of the descending wedge. It is bullish. Well, I mean, it's bullish because we came out of a descending wedge. As you guys know, we've had dollar Canadian as a range, right? We've had it as a range. It is now turning bullish because we came out of a descending wedge. It was a bullish reversal pattern.
Yeah.
I know we're still in a basic range here, but since it came out of a bullish reversal pattern and we hit a new low,
Looks great.
yeah, I mean it's bullish, and chances are now we're gonna challenge, if not break, this 129.50.
Great.
So
Yeah.
right, I mean
Yeah.
that's where the rubber meets the road now. So next resistance is 128.30.
Be back in a minute, Blake.
Yeah, sure thing. I'm going to flip the dollar Canadian to bullish because of the reversal patterns that we've seen here. Any dip down to 127.35, we'll find buyers now. Okay. Dollar max. That is a bull flag pattern. Again, if you're Forex Analytics subscribers, okay, you knew that bull flag pattern was setting up on Friday. A breakout above 20.05 was bullish. This is from Friday. That's a flag pattern, okay? Even though we closed the dollar max right here from that support move, it's now got a bull flag pattern that points towards 20.35, quite possibly higher than that. But that's where resistance is going to be today. It is bullish near term. This is a Wyckoff accumulation pattern. Oh, the Aussie's just getting smashed. It's near its lows. So this is a bullish accumulation pattern, right? And we identified it Thursday, Friday. So if you were here, so now any dip towards 2010 is going to find buyers today. Okay. Dollar Swiss. Now, dollar Swiss didn't come out of a bullish reversal pattern, but it is acting well. And it looks like we're going to challenge this resistance now, which is the 89, 89.890, 89.80. It's in range. I'm going to keep it in range now, and we should find buyers. Excuse me, guys. Mondays, I always just yawn because I spent the weekend actually sleeping in. Sleeping in for me is getting up at 5:30, but it's sleeping in. 88.50 should be support now. Dollar yen. Now, you guys know yields are screaming. Yields are moving higher. The 10-year has moved above 1%, as you guys are all very well aware of. Talked about it a lot last week. And that's keeping the dollar yen bullish. And now that we are above this downsloping trend line, we are probably going to be moving to this bigger trend line, which will be at this horizontal resistance, which is 104.80. And you have to imagine 104.80. We were bearish. Now we're in range. It'll go bullish above 104.80. And now dips down to 104, should find buyers. We're actually 103.90, actually, if I'm being more specific, because this is 103.90 right here, right? Okay. Okay. Whoa, what's wow. Dollars on the move. Hopefully you guys own some. I know we're playing the dollar. Okay, where are we going next? Dollar index. Let's talk about the dollar index. So the dollar index broke the downtrend line. And on Friday, we were looking for a dip to retest this trend line. Do you remember that? 89.60. We went to 89.68. Remember, we were like, if it drops down to 89.60, that's what we said on Friday. And then it dropped. I mean, it came close, not to the pip, but it came pretty. Oh no, I guess it went down to 65. So now any dip down towards 90 will be bought. So we can remove all this because that was from Friday. So now any move this way, we'll find buyers. The real question is, will we even get a dip like that? Because you have to keep in mind, the market is very short dollars. When the market starts to move and it starts to squeeze in the opposite direction, it's not going to be so nice letting people out. Oh, you're short? We're going to stick that short right up your rear end. That's exactly what the market's feeling right now. So I think we'd be really lucky right now to get down to 90. I just don't think it's going to happen. Aussie new lows. Resistance will be, well, the 38% rate. No. I take that back. Never mind. Forget what I was just saying. We got to figure out where that's at. So let's
it actually left a gap, huh?
Gap
Gapped up today.
Yeah. And the dollar index will get back down here again. I have no doubt about it. Unless stocks implode, Dale, and then you know how it is. Stocks implode, then we're not going to see the dollar at all. I mean, but chances that happen are probably pretty slim right now. So the 38% retracement is going to come in at 91. The shorter one. Okay, it's 91.15. So we didn't come out of a reversal pattern, but we did break the trend line. So we're going to be in range. And you guys know, remember all of our conversations last week, really looking for a move back up towards 91.50. And that's where, we should find some relatively decent, dollar sellers there. Now, we have to keep in mind that the stock market is at very elevated levels. And you guys saw it. Man, a lot of crap went down last week. A lot of scary stuff too, especially if you live in the United States. If I was an investor outside of the United States, now obviously I live in the United States, so I have a different point of view. But if I was an investor living in the United States, watching last week's crap show, I know we're all searching for yield, but I would be looking for it in Europe or in Asia. In the UK. I wouldn't own the US dollar. I wouldn't own US stocks. As a, position as a big institutional money manager, I wouldn't. I'd be like, no, thank you. Not after this run. It's been a great run. Thanks so much. But after this move, I wouldn't. I would be in European equities. I would probably be buying some, buying European equities, selling U.S. equity, or you know what I mean. So hedge yourself.
Outperformance overseas.
Yeah, exactly. I'd be, I would be tilting towards, moving and reallocating in that direction. So after seeing everything that's happened, and the U.S. is it's going to take a while to repair itself. the US will come back, but it's going to be a while. And I think that after such a massive run, I'd just rather have my money elsewhere. That would be my point of view. So as I pointed out to you guys on the S&P on the week ahead video, this is really key support. This 3780 intraday, we break through that, and then we're going to go back into range. So that is at 3780, and we're basically there. We're bullish today for now. We break through that, and we should get to the bottom end of this channel here in the next, couple of trading days. And that is what I'll be looking for to really snap this uptrend. I do think we're in an uptrend. I think we're at risk of going range, and we're not going to turn bearish until we break back below 3,600. I'm just telling you guys how this is all going to work over the course of the next couple of days. That doesn't mean, or the next week or two, that doesn't mean that we can't trade short equities. Just know that you're trading counter trend if you are, right? 38, I think any move back up towards 38.10 is going to find some resistance.
Like, you don't think that what we saw in the Capitol is one and done, do you?
No, I don't. And, so, regarding Twitter and, President Trump being removed from Twitter and Parler and all that, and a lot of people say, well, that, taking away free speech, but, this is where it gets a little tricky because they're private companies. You got free speech, go speak it on a hilltop, but you're not going to do it on Twitter's platform. That's what they say. And I agree with that. Then you start going into, well, what, at what point are they really taking away our freedom of speech? Who's it really in control here? And then that's where it gets very tricky. So I understand all the arguments.
It is, hey Blake.
Wait, hold on, Steve. Let me finish up my thought, please. So the thing about that is that shoot, now I lost my train of thought.
About free speech, bro, and
yeah,
Twitter.
But I guess because you had asked, is there going to be more? And
more violence.
Thing is, my thought process is I think that there's risk of being more violence, and that's why they had to silence him. I think this is a coordinated effort amongst technology companies. They might not approve of Trump's policies. They may not even like him, but I think there's a bigger threat out there, and that's just me speculating and without having any concrete evidence. But I think there's been a universal shift in like, hey, we got it, I think there has been a lot of murmur about, potentially more violence. So when you ask me that question, is it one and done? I don't think so.
I don't either.
I look at some of these guys and they look pretty militant, and I'm ex-military.
Yeah, some of them are saying they don't even care about Trump remaining in power, that they're going to carry the fight on to save their country no matter what. So
yeah,
it's like you let the genie out of the bottle here,
It did. No, I'm not going to get into those conversations here. It's just not appropriate. But here's the thing: is I do think that we are at risk of further violence, and I think that obviously is going to have the market a little concerned. And so that's my view. Now, Steve, I heard him chime in, so let's hear what Steve has to say as I'm doing analysis here. So go ahead, Steve.
I just find it peculiar, the argument that these are private companies is a valid one. I mean, everybody here knows that I'm a capitalist. On the other hand, these same companies have in essence been left out of any type of regulation because they are supposedly just hosting content, so they're not responsible for it.
Right. So that's that again, this is the whole, it's a much bigger conversation.
Yeah.
And,
so it's I'm
with you. I'm with you 100,000%, Steve. And that's the point I was trying to make is I don't agree. I think they are taking away our freedom of speech.
Exactly.
But in their defense, it's their platform. should they be regulated? Yeah. A much greater deal. Yeah. And that's the scary thing. That's why people are looking at stocks going, holy crap.
And either we like it or not, we know that from surveys, unfortunately, the vast majority of people nowadays get their news information from social media. So it's an unfortunate reality, but it is reality, right?
Yeah. And so again, this is a conversation, it's not going to really affect the markets right now.
Yeah, absolutely.
So I think our time is kind of limited, but that is a big ethical question. It's a big regulatory question. It is, how is it going to influence the markets moving forward? I think it's going to have a big impact. And, is it fair to Donald Trump to do what they did? I could argue yes and no. I mean, did he incite violence? Maybe. Are they taking away his speech, freedom of speech, his speakerphone? Yeah. I mean, and is it fair? I don't think so. But these are really tough questions, and I don't have the answers, and I'm not, in my opinion, really is irrelevant. So, and but I do think that a much bigger discussion will be taking place in the future. And I think that the potential for regulation in equities or in tech companies could really let the steam out of risk. And that is a risk that would be very much a tailwind for the US dollar. Because if equities, especially the technology companies, come under pressure, you better believe you're going to see the air come out of the markets, generally speaking. All right, let's look at horizontal support for gold is at 1820, and resistance on any rally now is going to be about 1875. So will be it. And then we are in a range. You guys know that last week when we cracked 1900, that was pretty much it for gold. So now we're in range. All right, so there's your bias chart. It is done. And I don't know if Stelios is here yet, but again, there are a lot of conversations, guys, and I don't want to be biased one direction or the other. I think that a lot of screwed up things have happened the last week that could really, and all of this can influence the market. But for right now, and for clear and present danger, you guys have to realize that the dollar is at risk of squeezing higher than where we're at. Okay.
Yes, right. They do. Yes, everyone does. And they were, we even talked about it prior to the low being marked, that you saw some bleeding of dollar strength into outside pairs while the dollar was still heading down, showing relative strength in USD MEX and USD CAD, that it had one more jiggle before the turn.
Yeah, and can I, yeah. So I think you guys have to just watch that this dollar might be showing us a little bit more, and really kind of showing us and the market what might be in store, which in my opinion would be risk off, and that could play into the broader market. So anyway, guys. For those of you that are not Forex Analytics subscribers, remember we are running our annual special. It is annual. And yes, we do run a couple specials throughout the course of the year. This is one of our steepest because it is at the beginning of the year, and it will be gone January 25th. And then you won't be able to see this for a long time, which anybody that listens here normally knows that's what happens. So I'm going to leave it at that and visit our webinar sponsor, which would be Pepperstone Securities. If you want to learn how to get Forex Analytics possibly for free for a few months, you have to click here where it says open account. All right, that's it. Steve, I hope you had a great weekend, enjoying this wonderful weather.
Yeah, it's amazing.
I know. Amazing. Here we've got the exact same weather, about 70 degrees where I'm at, but the difference is you've got a beach and I got a beach. I just have no ocean. Hey, Stelios, Stelios, did you get the bias chart, or you need me to take care of it?
I've done it, posted it already.
You're awesome. Okay. Good morning, guys. I'm gonna leave it to you. And thanks everybody for joining in.
Thank you, mate.
Blake.
Today it's
Hey,
even
Blake.
warmer, actually, 24 degrees Celsius.
Yeah,
It's
but
like,
end of week it's going to be quite a bit cooler, which is good for a change.
yeah, finally. I mean, it's like it feels like we're stuck in. We went
Spring.
from summer to spring instead of fall
Yeah.
and winter. Yeah.
Yeah. So hope everybody had a good weekend. We're getting closer to the day when Biden officially, well, no, Trump officially leaves the White House. I was reading that Pelosi actually wants to impeach Trump again. And the question is, from what I was reading, if Trump gets impeached while not the president, then he will bar him from going for president again or something like that. I have to read the details, but main thing is that to January 20th is the date when we get the changeover. It doesn't look like there's going to be any problems, no matter what, all the stuff that's happening. Trump himself has been pretty, I don't want to say quiet, but he's been pretty normal. So let's hope that things go forward peacefully, and we look at what the Democrats are going to be doing for the next term. And like we said on Friday, the next 2 years when they control everything should be interesting, and it's their chance to show what they want to do. In other news, obviously, stocks going down today. They're just really taking back Friday's gains. So it's not really like we're plunging or anything, but still, lately we've seen some two-way action in equities and risk in general. And like Blake said, things are pretty rich at the moment. Equity indices are
Quite an underestimation.
by many metrics. By many metrics, they haven't been this overvalued since 1929. I read an article the other day, and there's being long has made you a lot of money if you have been. Well done, but it's just the time to be cautious now, I think. Metals, we were talking about these last week. Remember, I was looking for a close in silver above 26.5, a weekly close. Before year end, it closed, I think, 26.39 or something like that. And then last week it almost did, but then it crashed on Friday. I have my first orders in to buy in the 22s if we get there. And if we do get there and we go lower, I'm just gonna add all the way down to probably 19. If we get there, obviously. So metals look weak for sure. The dollar looks like it's taking a breath. And again, we were talking about this, that the dollar was ripe for a bounce. How long and how strong will the bounce be? I don't know, but it's definitely ripe. And the thing I look at, and I know Blake looks at that as well, is the Scandinavian currencies. And today we had Norway CPI from 0.7% expected to go up to 1.2 year on year. It went up to 1.4%, and still the krona is down 1.5% against the dollar. And you know how this is usually, these currencies tend to lead, actually over 1.5%. They tend to lead the way. So we always look at them, not only if we have positions in them, but also for direction. So I think the dollar may be starting a nice little move. Correct.
To be honest, I've had a great run in USD NOK Stelio, and I'm monitoring this channel.
Weeks and weeks, right?
Yeah, I'm monitoring this channel. I don't want to abandon my core position because I'm really looking for USD NOK to make it to the sixes. But we break through this channel, I think I'm going to finally book like half of a position. You know what I mean?
Yeah, absolutely. I mean, you've been short from what, 11 or something? That's something.
I've added actually. I started at 1/3 of a position.
Yeah.
Close to 11. Yeah. And I've added 3 times during rebounds. So I've had a full position with my cost average being just below 10. So, it's been a very, very, very nice run. And as I said, I don't want to abandon my core position, but taking half of the table, I think it's a good idea, and probably I'm going to do it if we break through this channel. Of course, if you look at the shorter term charts, somebody can make an argument here on the 4-hour chart that we've already broken out, because this last part looks like a descending wedge. Look at the divergence as well. But since I'm a longer term trader than a day trader. You know, I'm going to wait for the for the channel just to, you know,
Yes,
to be more
makes
sure.
sense. Makes sense.
Um,
Otherwise, we had more data on COVID, and in the UK, I've said this before. I have my brother there for years and years. Lots of friends. Things are not good there. It's the numbers are climbing. They're pretty much full lockdown, and they're not the only country. So COVID is, even with the vaccine rollouts, they're going pretty slowly. So I think this year might be another wasted year, to be honest. But let's hope it's not. But
to be fair, Stelio, we had warned in advance that, I had mentioned multiple times, I'm speaking with doctor friends, etc. The maths were quite clear. I mean, even making the best assumptions having to do with vaccine efficacy, etc. I mean, the numbers just require time, right? I mean, until you go through a first round of vaccinations and supply can pick up, and the bureaucratic mechanisms working out to be able to roll out, as fast and as efficiently possible the vaccine, you need a lot more months, and then once this is done, you need to start revaccinating again.
Yeah.
So more or less, we had said that normalization during 2021 is very hard to happen, and if it does happen, it should be closer to the end of the year.
Yeah. Well, let's see how it goes. But otherwise, it's going to be a very quiet week data-wise this week. I was looking through the numbers, and really, there's not that much of importance. But anyway, we'll take
anyhow, the market doesn't really,
trade
on data.
We'll take them one day at a time. Yeah.
Yeah. So I mean, this market can really remain awfully quiet and with zero volatility through supposedly key data and very important data missing or bidding, and at the same time it's capable of on occasion doing some explosive moves without any real data actually happening. So who knows. One thing is for sure, Blake demonstrated that already. We had warned in advance that that we have a clear downtrend in the dollar, but momentum was waning, and at some point we're going to have a squeeze. The vast majority of the charts do show that it is likely that we're beginning to see this type of a rebound. Now, do I advise people to jump all in being long the dollar here? Not really. You can cautiously start building some positions if you want, but my thesis remains that this is going to be a counter trend move. That does not mean that it can't prove to be like a sharp, strong move, right? So keep that in mind. I mean, here's USD CAD that has broken out. I already showed USD NOK. Look at USD MXN breaking through this previous channel after a period of consolidation. All of them were clearly displaying divergences. Now, the key question is, will stocks actually catch up to this move, or this incredible brainless momentum of going higher is going to prevail and in essence rescue stocks from following, at least at an equivalent extent? I mean, so far we're beginning the week with pre-market a rather negative day, but we've seen that multiple times in the past. And keep in mind that in order for us to speak about the possibility of any type of technical damage done, we need to at least see a move below like 36.90, which is going to be at least a short-term lower low, which we haven't had in a long time, right? Now, of course, somebody can say, okay, I see the dollar pairs breaking out, so I'm going to take a stab. I'm going to be short here stocks against the highs, which is still like close. We had already talked about VIX diverging for quite some time, and of course, this divergence still persists, right? We've said multiple times that this is not a signal on its own to go short stocks, because we've seen in the past VIX diverging for long periods of time before it can actually, start playing out. But it is an extra indication that that might be the case. The DAX also getting rejected here from a nice confluence of resistances, the 127% extension of the latest pullback, and this expanding triangles, megaphone formation, you can call it, it's the same thing, trend line resistance. So, new week, start of the year, can that bring something new? Perhaps, but my thesis remains that if it is, it's going to be short to medium term, right? So I would start being cautious, having to do with time horizon and targets. But yeah, clearly we have indications here that something is changing. Let's see how we close the day, because don't forget it's just early Monday. I mean, it's not early if you're a European, but for the US markets, which are the most important markets, financial markets in the world, it's just the very, very, very beginning of the day, right? So let's see how the day unfolds, and if this type of moves actually get sustained through the rest of the day. And then closer to the end of the day, I think we're going to have a much better picture of what's happening up here. Now, having to do with the metals, I had to redraw gold's channel, right? Trend line resistance was passing from there, and we had broken out. But taking this time the parallel of support, we had already talked about the nice confluence of resistances that we initially got rejected because it was the 61.8% fib and the previous high. But as you see, there is also a way to draw this channel that makes it actually a triple confluence of resistances. What does this change? In my opinion, not really much, at least if you have my time horizon, right? Why? Because I still strongly believe that we are still within a corrective move. You can very clearly compare the move higher with the type of move we have lower, right? The characteristics are totally, totally different. The move higher was impulsive. The move lower so far is clearly corrective. We seem to be finding some support here at the 61.8 of the previous move higher. Can we actually produce a lower low? Yes, we can. Within the context of this channel, we can plunge lower towards 70.50, which, as you see, is also nice previous area of resistance, right? Which can easily act as support. Now, the little divergence I was talking about is the fact that silver is backtesting this channel trend line resistance as support. Can we perhaps reverse from here? I have my eyes mostly on silver for the reason I just mentioned, and let's see what happens from here. Of course, there is the chance that silver is going to move lower towards this trend line, this intermittent trend line, right? But once again, as I said about gold, I strongly believe these are still within the context of a correction. Now, natural gas still not finding the strength to propel higher from this channel, but I'm still keeping a very close eye to it. Crude oil, of course, playing ball with what stocks are doing and what the dollar is doing, meaning paring back some of Friday's gains. Could this have been an overthrow on Friday from this ascending channel that really got the bears to capitulate? I guess we're going to find by the end of the day, right? If that can be the case. If we completely retrace Friday's move today, I think that's going to be quite a worrying sign. Now, I remain bullish in the medium to long term crude, but of course, at some point, there needs to be some type of a correction lower. We can even move all the way back like $10 towards like 42, wouldn't surprise me. Now, does this mean it will begin today? As I said, it's too early. Don't jump the gun making all types of assumptions because of that. Now, one instrument I'm very, very closely paying attention to, and I think looks very, very interesting, especially in combination with all the rest, is copper, right? Beautiful sell-off today. Again, not coincidental in combination with the move higher in the dollar and the what seems to be a little bit turned towards the risk off. We had talked about multiple times how overdone copper is. I mean, copper went in March from below $2 to above 3.7, right? And this looks like a very nice ascending wedge. So I think a break higher from this, break lower from this ascending wedge, in combination with all of the rest, you can already see that RSI was diverging here on the daily for quite some time. I think it's going to be a nice indication, with obvious implications being that copper can retrace to the beginning of this wedge, but also that the rest of the instruments we talked about should have more downside to unfold. Here is platinum as well, had one last push higher from this flag, seems to be moving lower, so it seems to be starting some type of a deeper correction. Once again, here I'm going to say that I do believe this is a corrective move as well. Same deal with nickel. Look at nickel. At some point, it had a short-term overthrow on this channel, but as it seems, this channel still is important and plays a role. Nickel had also has had massive gains, moving from 800 to above 1300 within a period of a few months. At some point, of course, it should, produce some type of a proper correction to such a huge move higher. So bottom line, yes, there are definite indications that all these recent trends might be reversing. Moves might prove to be sharp. The market is overwhelmed by people that have caught up to these type of trends late on, and due to FOMO, they have been piling on these positions, having very weak hands because they bought at the, at very wrong prices, and they can't afford, some proper downside before the moves resume. So, yeah, I mean,
Good
this might be
segue with the metals. Good segue, because our guest will cover one that you didn't talk about, uranium.
uranium. Okay, nice.
Okay, so I'll bring Dave in if you're wrapped up here, Steve.
Yeah, absolutely. We'll talk more about the rest tomorrow. As I said, after today, I think we're going to have more, a better idea of what's happening, Dale.
Okay. Yeah, dollar good, everything else bad. Seems like what we have today anyway.
Yeah.
Except Canada and US dollar yen and Swiss. Anyway, dollar pairs. All right, so Dave Farber, welcome back to Face. So we've been talking about the metals, Dave, and I know that you're a proponent of uranium, and it's great to have you back. Welcome back to Face, Dave.
Thank you so much. Can you hear me okay?
Yeah, loud and clear, my friend.
Awesome. Well, hopefully everyone's having a great start to the week, despite some of the bearishness out here.
Oh, I love it. Down is faster.
Sounds good.
right.
Dale, do you want me to share my screen at all?
Yeah, Dave. So,
So
my associate Steve was talking about pullbacks in metals, began in earnest last week, and even copper and industrial, which is kind of a risk-on metal. I'm wondering if there's any kind of retrenchment in uranium. So you could go ahead and share your screen, buddy.
Yeah, I'm trying to figure that out right now here.
It's that green box. It says share screen on the drop down.
Right, I'm trying to see where the entire webinar just went on me. Okay, here we go. All right.
There we go.
So let's dive right in. Okay, apologize for that, guys.
That's okay. No problem.
So here's the Ura Etf, and we'll use this as illustration here. And it's been a heck of a run since we last spoke in November. In fact, I think our last conversation marked the bottom of the pullback, and it's been up ever since. But this uranium has not been the only metal, base metal, that's done incredibly well since that point in time. But this one has just the fundamentals finally have caught up, or perhaps the technicals have finally caught up with the fundamentals. And how the truth is, we haven't even broken out yet, right? If you look at this is a range since 2016, can get extended all the way back to 2011. And right now we are in this double top formation, which is no surprise that we pulled back some from the highs here over the last couple of days, particularly Friday. I think the sell-off in the metals really took down all miners, including uranium. But even if this pulls back and creates kind of a bullish flag here for a couple of days, if not weeks, this is a weekly chart. So
doesn't look like it should trade back under 12.5 to me, Dave.
No, I don't think so either. I think any pullback, even if it pulls back, will probably be short-lived. I would be surprised if it drops below that 1540 area around here. It's possible if the markets sell off greater, it can fall towards those 26-week moving averages. But at the end of the day, uranium wants to move higher. There's still so little knowledge about this sector. And I think the opportunities are fantastic. Now, for us and our subscribers, we had our best year. I mean, personally, I had the best year trading and investing in my lifetime. And it's in large part due to uranium. Some of these equities are up anywhere between 300% and 500% off their lows, some even more than that. And if you just expand your horizon and you look at it from a weekly and a monthly perspective, some of them are just now getting started in breaking out of their bases. So pretty exciting stuff in this sector.
Do you book anything? It's not a profit till you take it. You take partial positions off to ring the register, or you just stay net long? Hold on for dear life.
It's a great question. And knowing what happened back in the 04 to 07 bull market, where there were 35 to 50% pullbacks, that could be quite gut wrenching. I was too young to really participate in that one, but seeing the charts there, we are rebalancing. So there are some names that have, like I said, gone up 500,000%. So we take some profits there and rebalance into some other names. But for the most part, I'm not a believer that you want to start playing the guessing game, because you can miss out on the next run, and it all depends on how one is investing, right? If you're investing in a tax-free account, then you can have a lot more freedom to sell a little bit of the froth at the top. Most of my largest gains are actually in taxable accounts. So given where the taxes are these days, I'd rather hold on and just experience the long-term gains, because I do expect to see some of these names on our watch list becoming 20 to 50 to 100 baggers potentially. So
I'm an old timer, and I've heard that I don't want to take liquidate positions because of all the capital gain taxes I owe. And I'm talking back in 2000 when the dot-com bubble started to break, and people would come into me and I go, well, you could always just, flatten out, get to the sidelines. They go, oh, well, I'd have to pay too much in taxes for capital gain. And they ended up with capital losses. So, anyway, I don't think it's the best contingency for holding a position, tax consequences.
Yeah, you're absolutely right. You're absolutely right, and that's
so I'm just pointing it out because I've seen people do it, and they should be grateful that they have capital gains to pay taxes on, instead of saying, "Well, I don't want to pay the tax man," and then seeing the paper profits dissipate. That's all. Just from an old man, okay, buddy. Just a little something from an old man.
Yeah.
Okay. But great call, Dave. I know. I mean, you've been on top of this, since you and I have been talking. What a great run. Are we starting to get some news? I think something out of Europe, some of the new nuclear reactor technology. Do you think if Biden finally becomes president, that he's going to go that way? I don't know if he talks about it. Go ahead.
While I'm no fundamental expert on the sector, I defer to some other great experts there. Well, my due diligence in the sectors, basically, there's money pouring in. Biden, the Democrats have bought into uranium becoming part of the ESG space, and focused on, they recognize that uranium is a very, very important part of their agenda. And when you're looking at the restarts in Japan and all the construction of reactors in India and in Europe and in China and across the United States, it's the fundamentals are all aligning. And we have to, the reason why I look at charts from a weekly and very often monthly perspective is because perspective is so important when you're talking about a sector that's been down for 12 years and has just bounced. If you take away those March lows, because I think that was a liquidity event, but in the case of Ura, you just bounced from $9 to $16. That's not such a big move in the grand scheme of things. When Ura used to be $50 to $100 a share in companies, this is, I think the first inning is largely not even begun.
Are you expecting those historical highs to be achieved again?
Anybody's guess. I mean, I think the fundamentals are there, that the price of uranium will probably settle into anywhere between $60 and $70 a pound, but overshoots are always possible, and I would not be surprised to see an overshoot to well above $100. And if were that to occur, like I said, you're gonna see some of the names in the sector creating life-changing returns for some folks.
Okay, and have you noticed that it thrives more with a weak dollar than with a strong dollar? Because we've had some pretty extreme dollar weakness during the run that we've recently had since you and I last talked. Dollar's down pretty hard up until last week.
Right. I have not found any direct correlations between uranium and the dollar. I think that there is some. I have seen some correlations between uranium and precious metals, where the mining stocks tend to be bunched into with the mining stocks of the precious metal miners.
Okay, Dave. What else is on the docket?
You know, I think in general the theme that I'm seeing right now is inflation, and I mentioned that last time around as well. You step back, and whether you look at let me pull up a couple of these here. Emerging markets is an area I've been watching. Right, I mean they've absolutely broken out, and while pullbacks are possible and probable at some point, possibly we're starting one right now, I think this is unequivocally bullish trend that's starting in inflationary assets, commodity-based currencies, and commodity-based countries. Another thing that I'm looking at very interesting right now in the same theme is bulk shipping. So if you look at the bulk shipping ETF BDRY, that's breaking out of its base as well, right? So, and this is something that's been very volatile. Every time we seem to buy in, it seems to drop back. But if you just step back, notice that this is breaking out of a base. Momentum is at its highest point in a couple of years now, and I think it just goes to show you kind of what we're seeing in energy, right? Your last guest spoke about energy, and while we still have not broken out in energy, I think we have a little bit higher to go before a pretty deeper pullback potentially. But the point is that you're looking at a lot of these areas that suggest that inflation is picking up. Copper is another area. Well, here we go. It's possible.
Can I ask you a question regarding BDRY?
Absolutely.
Is it like the Baltic Dry Index, which is kind of one that people have been talking about for years?
Well, this is not the index. This is an ETF.
Do you know what I'm talking about?
I do.
You know, are they related?
They are.
Okay.
And
so it's not an ETF. This is the ETF on the Baltic Dry Index.
Correct. This is the ETF of the basket of stocks that are probably underlying that index.
Okay.
So we're seeing a breakout. We're seeing a bullish crossover here of the 13 and 26 moving average. So those are some of the asymmetric areas that I look at right now. Another one, obviously, that's been a little bit top of the radar with the Biden win is the marijuana sector. That's starting to break out right now as well. And these are just the beginning of new trends. And there's just a lot more upside, I think, before any reasonable pullback. Another one that we've been on top of for quite some time are the regional banks. A little bit more boring, but this is very, very connected to interest rates.
Yeah.
Interest rates have broken out, and well, it's hard to say they've broken out, but 10-year interest rates have certainly broken out from where they were.
Yeah,
And
the 1%
Yeah.
resistance we got through. Yeah.
Yeah, so I think we're headed to 1.3 to 1.6 on this run. There will be pullbacks along the way, but again, it speaks to the theme that I'm seeing, in that you're gonna see a period, perhaps a decade, of commodity related investments doing incredibly well, whereas in the last decade didn't do much at all. Perhaps similar to kind of what we saw in the 70s. It's a possibility where equity markets don't do as well, but commodity related stocks and countries and currencies will really outperform during this period of time. One more point I like looking at in my analysis is the high yield index option adjusted spread index here. And what this shows is the spread between the high yield bonds and the more higher quality bonds. And so the lower the spread is, the better the credit quality in the overall economy is. And you see here, even though this is still kind of a bullish wedge here, but it's breaking down, and that's a good sign. That's a good sign for the general health of the economy. So when I put all those together, pullbacks are healthy, but at the end of the day, you're seeing a lot of really good long-term trends just now starting to break out. And I don't think it's the end of these trends. I just think it's the beginning. Here's another example, microcaps.
Caps.
These are the microcaps
Okay.
against the S&P 500. They broke out of a multi-year downtrend, and now they're just starting to break out and close to, I think, this overbought territory, which when it gets to that area is when you get some of the largest gains, actually. And I do want to touch on, before we end here today, is crypto. It's not an area that we invest in heavily. Simply, I just don't understand the fundamentals. But when you look at this chart of Ethereum, and this is something we've been talking about to our subscribers for quite some time, this is an arc, and that's one of the most bullish long-term charts. And we basically hit its target around that 1400 area this weekend. And so pullback, perhaps a sharp pullback, wouldn't surprise us at all. But at the end of the day, these cryptos are very likely going to break out to much higher highs at some point in the future. So it's pretty interesting times. There are
along the world, Dave.
Yeah.
It doesn't matter. You could buy anything right now.
Yeah. So I
Doesn't
think
feel that way, do you?
It does. I think 2020 is going to be a very interesting decade. I think there's going to be a lot of volatility. There's going to be a lot of surprises, but I think that global equity markets are breaking out, and I don't know what to make of it, because I understand all the reasons why the markets might need to fall, right? There's just chaos everywhere. But the amount of stimulus that's going on around the world, both fiscal and monetary, at the same time, and with the technology that's being invested in global markets, it's pretty exciting, actually. I think there's some great trends that we're spotting, and we shared a couple of these with you guys, and we'll continue trying to identify more as they come. But there are some asymmetric opportunities in sectors that have done nothing for 10, 20 years.
Okay, so Rip Van Winkle waking up with David Farber. So Dave, best way for people to stay in touch with your work or contact you?
Sure. The best way to do so is check us out at moneyology.com. That's MONIOLOGY. You can also send me a note at dave@moneyology.com. And I'm active on Twitter. Handle is @moneyology. Try to post a lot of free content. And the key thing for me is education. I don't like giving advice in the terms of what to buy and when to buy it, but I want to empower people to see these charts and understand them and really determine their own personality, investing type, and make their own decisions and have conviction, because volatility is the name of the game for the markets. And I think most people, they try to find a trader or two to follow, but in the end of the day, if they don't have conviction in their own investments, then they're going to make mistakes that can cost them dearly. So it's all about education.
Okay, well, thanks for edifying us today, Dave, and congratulations on a lot of your positions coming home.
Thanks
Happy
so
New.
much.
I know you're having a happy New Year, so good luck the rest of your life. How's that? That cover everything? Best wishes the rest of your trading career, buddy.
Thank you so much. Have a very happy New Year. Talk soon.
All right, Dave. That's
Take care.
Dave Farber at Moneyology. And Bruno, it's at Moneyology. So all you have to do, MONIOLOGY on Twitter. And yeah. And that's a wrap. And we'll see everyone for Turnaround Tuesday. Remember, oh, you're welcome, Brock. Yeah, thank you, Dave. There's Dave right there putting it up, and there's his website. So don't just count your pips, count your blessings. See everyone for Turnaround Tuesday tomorrow. You're welcome, Ariel, Scott. Adios.